All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for the market bias update report for Sunday, April 6th. It is about 4 o'clock. Markets have been open for futures for about an hour now here on Sunday. Before we dive into the charts, recapping last week's trading, ended up making $10,707.50 in the futures market over 4 trades. You can see right here, had 3 wins, 1 loss. Again, total just shy of 11,000. Also made 1,308 in options and stock trading for a total gain this last week of $12,015.50. Total trading stats, I had 1 loss, this futures trade right here, and 5 total wins. So moving right into the charts, I am not going to bother this week going through each individual sector because they are all bullish. And it would basically just be me saying, hey, this is bullish, or excuse me, bearish. Everything is bearish, not bullish. That is bearish. This is bearish. This is bearish. This is bearish. You get the idea. So instead, we are just going to look at the futures because it is actually showing the open and the gap that has occurred over the weekend here. And we are just going to talk about the 4 major indexes this time on the weekly time frame. So on the daily chart, if you look at this, this is just in free fall. On the weekly chart, if we zoom out, this starts to give us a little bit of context as to where buyers might step in, or better put, where people that are shorting this downfall here are going to start buying to close their shorts. To me, that looks like 4,700 on the S&P 500. So if we look at this, we have our 200 period SMA right there at 4,700. We have other known pivot points, one right here, and then another test right here as this bullish run started. And if we toss this out to a monthly time frame, we can see that that correlates with not only these more recent price points, but also the price history back from end of 2020 and 2021, or excuse me, end of 2021, beginning of 2022. It also correlates to the monthly 50 SMA here, which is very important and is just under that 4,700 zone. So we're going to call that anything from 4,700 down to 4,650. So that 50-point zone there is kind of where I am anticipating that buyers might try to step in a little bit. Whatever buying activity occurs, going back to the weekly chart here, I think is going to be fairly short-lived. Within bear markets, we do tend to see fairly aggressive counter-trend rallies, meaning that we could see a fairly significant bounce. I am not anticipating a large bounce this time around, just simply because the overall environment and the theme that is driving the market right now is incredibly, incredibly bearish. We are on potentially precipice of a war with Iran and potentially Russia. We have tariffs going into effect across the board and are going to be hearing more probably this week on the development of that theme and what countries are going to potentially retaliate. Doesn't sound, at least so far, like there has been a whole lot of people willing to come to the table to negotiate, which is Trump's whole point of this. His whole goal is to try to get other countries to come to the table and negotiate, and nobody seems to want to play ball with him this time around. People are fed up with him. They think that this is just absolute BS. And whether or not countries are actually willing to come and negotiate with him now versus his first term is still going to be kind of a wait and see environment. So looking at the S&P 500, again, that 4,700 to 4,650 zone is where I'm expecting a little bit of a bounce to come in. Any bounces that we do get, I am going to be viewing as chances to reload on short positions and playing the downside on them. I am not looking for an opportunity to buy into the market for long-term positions right now because I do not think we are there yet. Going out to the Nasdaq, if we identify those same levels on the Nasdaq, we have really important price action on the 3-week chart here and the 200 period moving average, basically identical to the S&P. For the Nasdaq here, that is going to be coming into a range of about 15,800. If we toss this out to a monthly time frame chart, again, we have that rising 50 right in that same area. And then we had tested and chopped around right in this same area. Price point is obviously important right in this zone. So that is going to be where I am focusing on the NASDAQ right there at 15,800. If we go down to the Russell, this is a slightly different chart. Obviously, you can see that we are well below the 50-period monthly. If we toss this out to a weekly chart, we are well below the 200 period, which is this gray line right here at just above 2000 on the Russell. So we do not have any more moving averages to act as support below us. Any bounces on this have got to be looked at as potential shorting opportunities. And honestly, I see more pain to come with this. I would not be shocked at all to see us come down and instead of a moving average, coming down to the support level here at around 1600 on the Russell. So that's about another 150 points potential movement to the downside. You can see also that price point played a role in history back here a number of times. So that is obviously a very important price level to the market. If that breaches, it is lookout below. And honestly, I wouldn't be shocked to see something similar to what we saw in COVID here, just an absolute free fall. So shorting is the name of the game this week. Bearish basically across the board, and just trying to be strategic on where you enter for those short positions, waiting for a little bit of a reprieve rally before diving in. Last but not least for this week, let's go out and look at the Dow Jones. The Dow Jones, you can see, has just a touch of room here before it gets to its 50 period on the monthly, and then has a long way to go for its 200. Its 200 is much slower moving than the others, and it is all the way down at 22,400. If we drop this out to a weekly chart, you can see that we are approaching the 200 on the weekly here. So somewhere around 36,200, 36,300, somewhere in there, I would expect a bounce to start to occur. That will probably be short-lived, however. Finally, wrapping up from the charts, let's go out and look at our FinViz heat map. And you can see here the bulls had absolutely nowhere to hide. Bears firmly in control across the board in the entire marketplace. And not just in control, we are seeing huge losses across the board. 11% down for the week on Amazon, 9% on Tesla, 13 on Apple, 14 on Nvidia, just across the board. Boeing had a 21% drop last week. Let's see if we can see anything on here that beats Boeing's 21% drop. I see MU at 26% down. So anyways, just absolute bloodbath there. The only nice thing going into this week for trading that we do have is on our Forex Factory. We don't have any important, or very important at least, economic data pieces coming out Monday or Tuesday. So we'll have a slight reprieve there. Wednesday, the Fed FOMC meetings are going to be released. Meeting notes are going to be released. That'll be interesting, but I'm not expecting them to have anything to say in those minutes other than basically we are not going to adjust up and we are not going to adjust down. I think the Fed's hands are absolutely tied right now between the market just shitting the bed, pardon my French, and tanking, and the risk of double dip inflation, meaning that they cannot start to loosen rates any further, and they are not going to be cutting rates to save the market anytime soon. Moving into other data on Thursday and Friday, we have core CPI and core PPI, consumer sentiment and unemployment. So very heavy on the latter half of the week and light on the front end of the week is going to be the name of the game this week. So anyways, trade safe. Let me know if you have any questions. Hit me up in the comments. Join our Facebook group. The link is in the description if you want to be involved in conversations with other traders. And yeah, bearish is the name of the game, guys. So be safe and wait for good entries with low risk environments on bounces to be able to re-up on your short bearish positions.